Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Monday, December 17th, 2007. I'm going to touch on a few key things today, and it's going to have to be a quick on each thing because we have a lot to cover today in the technical side of things, the psychology side of things, and overall in the earnings side of things I want to touch on as well. Let's get right into the charts here, and I just want to touch base on a few things right off the bat. Number one, the Nasdaq. Here's the Nasdaq chart, folks, and I want to just go over some technicals with the Nasdaq chart. First off, on Friday we mentioned that we were sitting right on this 20 moving average, which is the yellow line right here. We closed actually a hair below, and I said on Friday, Monday's going to be key because we're going to see, do we confirm the move down, or do we bounce off this level and move back over that 20 moving average? Well, guess what today? Obviously from this candle right here, we confirmed a move down below that 20. Not only did we confirm that move down below the 20, but we actually closed below the 200 and even below a gap fill. So we took out some key technical levels today that I really want to go into here because of how key these are. First off, you guys know, if you guys look back at the midweek from last week videos, we pointed out key technicals on the market. Number one was the 20 moving average right there. Number two, if we broke that 20 moving average, we were going to come down to this gap window level right here. Okay? And again, the gap window is the area before the gap fill, which is between these two areas. That's number two. Number three is the 200 moving average right here. Okay? Right around here. Alright, that was the third support level we pointed out last week. Okay? And let me just get this chart back here. Number four was the fill of the gap right there. Okay? Now, what's so interesting about this, folks, is that we took out 4 levels today. Alright? And for those of you that are technical buffs like I am, that's pretty impressive because it really shows you that there was nothing that could support this market today. There was just constant selling. So we took out 1, 2, 3, and 4 levels and closed below the gap fill window here, the filling of the gap. Now, if you're a technical analyst or a technical technician like I am, and then it's very important to understand right here that the next spot, should we confirm this move down tomorrow, is this point right here, which is the lows from November. Now, I'm not going to go into anything lower than that at this point. We'll wait till we hit that level, and then we'll talk about the next level down from there. Now, there's a couple interesting things coming up this week that I find very, very peculiar, very interesting, and that lead me to believe that this is not really, we're not going to quite, maybe not quite this fast drop down. And listen, we could, because I do expect to bounce into Options X, and I mentioned that last week that I thought during the midweekish area leading into Options X this week, especially with the financial firms reporting, we could see a small bounce up in this market. But if you look at the technicals here, it's leading us to believe that, well, listen, that may be true, but it's somewhat of a 50-50 here. I personally am leaning still towards a little bit of the bounce scenario here, and I hate to stick my neck out here and say, yeah, I think we're going to bounce, but there's a few key issues I want to bring up here. Number one is, before we have many key levels here. Should we not confirm any of these tomorrow and we gap up, then we don't confirm any of these move down, okay? And that's so key to understand, folks, and I really need everyone to be aware of that, is that should we move up tomorrow, then any levels we move up and close above are support areas that have technically held because you didn't get a confirmed move down. So if we closed here tomorrow, then 1, 2, 3 levels are still support areas, okay? Now, what would make me think that that's a possibility? Goldman Sachs reports tomorrow. Goldman Sachs. Here's Goldman Sachs' chart, and I want to point out a triangle right here on Goldman Sachs. All right, you have this basic area right here. It's a basic triangle. It could go either way, but the fact it was only down $2 today, and the XLF, which basically gauges the financials, was only down 31 cents today. So financials held up very, very well today across the board, considering the market's fall. Now, well, why would that be? Well, could it be Goldman Sachs is coming out with earnings tomorrow and there's some idea that maybe we'll see a positive bias on those earnings? Yes, that could be possible. Now, I'm a huge believer that Goldman Sachs is basically the overall, it's kind of looked at as the baby of the whole market, especially the financial sector. And what do I mean by that? Well, here it is. Yes, it was as high as 250, but even on this major drop, and some of these financial stocks have dropped 50+%, Goldman Sachs is still trading around 208 here. Okay? Now, it's really going to be key. If we go down here, it's a breakdown. I mean, you can see the line here we're making. You have a breakup point right here, breakdown point right here, and if we close down here tomorrow, yes, it's a breakdown on Goldman Sachs. However, It's key to remember that this being the baby of the financial sector and of the Dow in many ways, there is a small chance here that we're going to see a positive move up tomorrow, and I'm going to explain why. Well, Goldman Sachs reports, right? Now, if Goldman Sachs reports in line to positive and doesn't mention anything about write-downs and says they're okay, I think you see a big-time rally in this market. Now, well, why would I think that? Well, because, again, this is the baby of the market. So far, Goldman's held up well. Goldman somehow has been immune to many of these sell-offs in the financials. Should they continue to be immune, that'll be psychologically very important to the market. Now, on the other side, on the flip side, there is a key here. If Goldman Sachs says that they're going to start taking write-downs, big write-downs on these subprime/credit issues, then you could be looking at a major sell-off tomorrow. So I know I'm slightly, maybe 55% to 45%, leaning towards a move up in the market tomorrow, or at least initially on Goldman. There's still a 45% chance, which is almost half, almost 50-50, that if Goldman disappoints here, we're going to see a dramatic fall in this market. So it's really very interesting to those that are keyed into the market here, including myself, on which way this market's going to go, and it all revolves around Goldman. All right, I can't express to you how much I feel this is going to play into tomorrow. All right, everything is riding on Goldman at this point, and I truly believe Paulson, and I truly believe that Goldman Sachs and the whole financial sector understand how key Goldman Sachs' earnings, which is kind of why I'm a little hesitant to say I think they're going to miss or I think they're going to say something negative, because they understand that the markets are looking at this as in, oh my goodness, this is key. So it's almost going out on a limb to say that they won't at least meet guidance or do okay. Okay, folks? So let's keep in mind, I personally, and I speak from my opinion, in no way, shape, or form should you be taking this as financial advice. It's just my humble opinion, and these are just entertainment videos. But, I'd slightly favor the upside on a bounce tomorrow. I do feel like there's a lot of bears out there. Goldman Sachs would not shock me if they came out with decent earnings. It has been the baby of Wall Street and so forth. Okay? So that's number one. Now let's look at the SPY here, folks. Again, the SPY, very, very ugly. But what I want to show you here is this area right here on the SPY. Here's a gap window right here. And this is going to be support right here on the SPY. We need to watch that level right there. All right, now we covered the financials, we covered the SPY, we covered the Nasdaq, and we're going to find out tomorrow. I think they come out before the market opens tomorrow, and I truly believe that the futures will be pretty much flat to, give or take a couple points either direction into this earnings announcement. Now, a couple other things going on. Number two, Thursday, Research in Motion is going to report earnings. That's going to be key for the tech sector. And by the way, some tech companies got hammered today. Look at Baidu. This is the daily chart here, folks. Baidu was down 37 points today. That's a pretty big drop. That's a 10% drop on a $300 stock, and it's just a very sharp drop. Also, Google got hammered today, down 21 points. So a lot of these large cap techs, Research in Motion, closed at $100.26. So and you guys that have watched the videos understand how key 100 level is on Research in Motion. So they did close it above 100 today, which also leads me to believe that they're going to do their best to support this market, and we'll have to see where this goes. All right. Also, Apple got hammered today, down $6 to 184.40. So overall, we saw some major bloodbaths taken today in the markets, and the Nasdaq took the heat of the brunt of the storm here. Okay. Now, a few other things I want to point out. One is I mentioned this in the Sunday night chat, ADPI, and I'm going to type it in here, and you guys can see. This is a stock that we were. Let me see, just got to bring it up. There we go. And ADPI is American Dental Partners. I'm going to show you the chart on this. This is a stock that I mentioned in the Sunday night chat last night to watch for a bounce in. And also a stock that in the chat room, those of you that are in the chat room, we picked it up on Friday for a bounce play. Just a phenomenal chat room, guys. I truly, strongly suggest you come. This was a swing trade we held overnight. Small position because it was a high risk. But look, it went from $20 down to $5, actually to $4.20. All right, we picked it up on Friday at $4.45. Sold today at a move over $5.47. It went as high as $6.90. Just percentage-wise, you can't go wrong with a play like that. And again, I can't express to everyone how key psychology is in the markets. You need to understand psychology. You need to understand that when everyone else is throwing out, the baby with the bathwater, as they say, that's when you have to step up there and say, I'm going to take a small shot. Now, you don't have to take a big shot, but in general, you got to wait. When it gets to the worst point, meaning this stock was in the low fours, that's when you step up and say, sure, I'll give it a shot. It seems a little overdone. The bounce comes in, and you make, I cleared 25+% on it, about 25% or so. Many other people held a lot longer, made a lot more on it, and it was just a tremendous play. So that was a chat room play, folks, a swing trade for the chat room, actually, that these are just announced in the chat room. And by the way, folks, the swing trade alerts are larger stocks. In the chat room, we do swing trades that are smaller, more volatile, because you have to be hands-on. You have to be at your computer with these things in case they dump out, and that's the key there. All right, folks, that's about it for today. Truly watch Goldman Sachs tomorrow. This is going to make or break the market, and I want to show the Nasdaq again. This is all about the levels here, folks. Do we confirm this move down tomorrow with Goldman missing or disappointing, or do we have a big-time move up and a gap up tomorrow and not confirm this down move? Right now, we closed below the 200. We filled this gap here, and we are looking to take out the lows should we confirm this tomorrow. Take care. Have a wonderful day, guys. We'll talk to you tomorrow night.